We don't need their lumber. We have more lumber than they do. We don't need Canada's lumber.
Canada is mulling restrictions on lumber exports to the U.S. to cool trade tensions, according to British Columbia's premier in a Bloomberg News interview. A report cautions that Canadian tariffs could inflate home building costs by $14,000 by 2027. On July 12th, Washington imposed a steep 35% tariff on all Canadian lumber shipments at daybreak. By midday, Ontario tightened its grip, slashing the flow of softwood lumber to the U.S. market. Resource-wise, X estimates the impact at 28.1 million cubic meters annually, roughly a third of the lumber used in American homes. The Wall Street Journal projects this shortfall could drive up single-family home prices by $10,000. U.S. builders describe the timber crunch as the worst since World War II. Ontario's quota threat, however, is just the opening salvo in a broader trade conflict. Halting lumber exports doesn't merely slow construction. It reshapes entire supply chains. What happens when every plank becomes a cross-border bargaining tool? Stay tuned, as this dispute could reshape the North American economy before your next mortgage payment. The stakes rose on August 19, 2024, when Washington hiked its duty on Canadian softwood to 14.54%, a move Canada labeled as punitive. Resource Wise's April 2025 trade brief warns this strike threatens to destabilize the U.S. housing market, as nearly 30% of America's studs and joists vanish. This lost lumber could have framed every home started in the U.S. last year. The National Association of Home Builders, NAB, now estimates this tariff-fueled shortage could add $7,500 to $10,000 to the cost of a median single-family home, with mortgage rates already near 7%. The pain doesn't stop there. On July 16, 2025, Reuters reported Canada is prepared to cap exports, prioritizing domestic jobs and squeezing U.S. buyers. Ontario's mills, running at over 80% capacity to support a domestic green building surge, would keep lumber at home. If Ottawa limits exports, U.S. importers could lose the equivalent of 16 Empire State Buildings worth of lumber monthly. Alternatives are scarce. In 2023, Germany and Sweden combined shipped just 3.5 million cubic meters to the U.S., a fraction of Canada's volume, with higher shipping costs and delays. U.S. sawmills face bottlenecks. Regulations, labor shortages, and wildfire-damaged forests mean scaling up is years away. Lumber futures hit $650 per thousand board feet in March and could climb to $765 if quotas tighten, analysts say. Reuters' economist survey warns that single-family home starts, already at an 11-month low, could plummet further if restrictions solidify. This lumber clash isn't just a trade headline. It's a structural risk that could undermine the American dream of homeownership. Ontario's response caught Washington off guard. On March 4, 2025, the White House proposed a 25% duty on all Canadian goods, including timber. Fast Markets cautioned that even a brief levy would disrupt the forest products sector on both sides of the border. Canada still supplies 12 billion board feet of softwood annually, 28 million cubic meters, or a third of U.S. framing material. Fast Markets audit shows U.S. sawmills are 3 billion board feet short of closing that gap. Ottawa senses its advantage. On July 16, 2025, Reuters noted British Columbia Premier David Eby's openness to export caps, signaling a hard limit on lumber shipments. Once enforced, every 2x4 becomes a ration commodity for U.S. builders. Canada has other markets waiting. Global Affairs Canada highlights that the CPTPP, once fully implemented, eliminates tariffs on all Canadian forest products across 11 Pacific nations. Cities like Tokyo, Sydney, and Singapore can buy at market rates, while U.S. buyers face a 25% surcharge. Ottawa is also steering mills toward high-value products, engineered panels, prefabricated walls, and finished cabinetry that qualify for duty-free status under CPTPP and CETA. This shift boosts domestic profits, cuts raw log exports, and leaves U.S. buyers scrambling for scraps. If quotas hit before fall, analysts predict lumber prices could surpass last spring's peaks. erasing recent relief and piling costs on entry-level homes. Ontario's mills will prioritize Canada's green building initiatives and Asia's tariff-free markets. In short, the U.S. started a tariff war over raw lumber. Canada is poised to sell finished buildings. Washington's 35% tariff didn't stop at lumber. It swept through steel mills and soybean fields, pushing duties to levels unseen in decades. Yale's Budget Lab warns this could slow growth and raise unemployment by year-end. Hundreds of thousands of jobs may disappear as factories pay more for bolts, rebar, and steel sheets. Households face a second blow. Researchers predict consumer prices could rise 2.1%, draining $2,800 from the average family budget, even if the Fed holds steady. Groceries will feel the pinch first, as tariffs hit fertilizer, tractor parts, grain bins, and beef imports already strained by China's restrictions. Steel faces similar pressure. A 35% duty on hot-rolled sheet adds $1,200 to the cost of building a mid-size pickup, per S&P Global Commodity Insights. Builders, already grappling with lumber costs, now face pricier I-beams for apartments and rebar for highways. The UN's Trade and Development Arm warns that high duties inflate production costs, weaken competitiveness, and drive investment overseas, a dual hit of higher materials and grocery prices that could spark a cost-of-living crisis. Investors see the fallout. The Dow Jones Home Construction Index dropped 8% since the tariff expansion, while Chicago's corn futures near a 14-month high. The White House claims tariffs will restore jobs, but economists argue they often just shrink markets behind taller barriers. If Canada restricts lumber and China blocks beef, Washington could face steel and soy shortages during election year, taxing not just trade, but confidence in America's economic engine. Cross-border commerce is already hurting. Customs data shows a sharp drop in traffic at Niagara's Rainbow Bridge last April, with tens of thousands fewer cars crossing the Peace Bridge that spring. Each empty lane is a lost sale. By February 14th, Erie County sales tax revenue fell 7%, a $4.9 million shortfall blamed on absent Canadian shoppers. Outlet malls on the New York side report double-digit foot traffic declines, and roadside diners now close early as evening crowds vanish. The chill runs deeper than economics. A May 28, 2025, Dunnhumby survey found 71% of Canadians plan to buy fewer U.S. groceries this year, driven by anger over lumber tariffs, pride in domestic goods, and fears of more trade flare-ups. Retail experts warn that if half of those shoppers follow through, U.S. border stores could lose a third of weekend revenue, just as rising lumber and steel costs cut into profits. Buffalo's Chamber of Commerce calls it a dual freeze. Canada halts lumber, and its shoppers close their wallets. Washington can't mandate foot traffic, and Ottawa knows it. Empty parking lots signal a new reality. This trade war moves on policy and consumer sentiment. County officials will push Congress for relief as losses mount, but rolling back tariffs risks looking weak in an election year. Washington's tariff escalation now faces a critical choice. Yale's Budget Lab estimates that with all 2025 tariffs and retaliations factored in, U.S. GDP could shrink 0.45%, $135 billion annually, indefinitely. The U.S. can absorb the hit and keep pressing or back off. A 25% car tariff would raise the average 2024 sedan's price by $6,400, a 13% jump hitting lots quickly. Combined with lumber, steel, and grocery surcharges, household budgets face mounting pressure. Canada braces for its own pain, a 2.1% economic contraction, per Business Insider's July 21st report, but sees a path to diversify into European and Pacific markets. Both sides lose, but Canada gains strategic flexibility. The White House must decide: scale tariffs back to 15%, claim a win, and ease pressure on swing state consumers, or double down, risking an election year inflation spike that overshadows lumber woes. Staffers hint at a partial rollback by Thanksgiving if Canada softens its quota stance. Trade hawks, however, favor toughness, even if it burdens the same builders subsidized last year. The Federal Reserve notes construction lags rate cuts by 6 months. Delay a deal until winter. And 2026 could see plywood at record highs and unsold pickups crowding lots. Which path will Washington choose? The decision will determine if this lumber dispute grows into a trade war that cuts half a point off U.S. growth or fades as election year posturing. A $10,000 hike on starter homes, $6,000 more for a sedan, and rising grocery costs loom. Ontario's lumber limits, Washington's 35% tariffs, and Canada's consumer boycott form a cascading cost crisis. We've shown how 28 million cubic meters of lost lumber ripple through housing, steel, and soy, how Border Bridge is quiet, and how the Budget Lab projects a permanent 0.5% GDP dent. Canada faces losses but eyes tariff-free Pacific markets, while America weighs whether to stand firm or compromise. Markets abhor indecision. If Washington waits until plywood hits $800 and Midwest voters revolt, policy will chase panic, not strategy. The outcome isn't set. Comment below. Will the White House hold fast to bring jobs home or cut a deal before construction stalls? Subscribe, as the next turn in this trade war could hit before your lumber order ships.